Hello, and welcome to myfinanceteacher.org. Let's have a look at gold, but at the same time, we'll have a look at the US dollar and a quick look at the general stock market as well. And we're going to start with the US dollar DXY. DXY is 41 days into its short-term daily cycle, and clearly the daily cycle has topped over here on the 20th of August. And as usually these cycles last for around a couple of months for the dollar index, I would expect the remainder of this short-term daily cycle in the US dollar to continue down into the cycle low perhaps in the next couple of weeks. So as usual, cycles lasting for, let's say, a couple of months. I would expect the end of the cycle sometime in the second half of September. And by the way, right around that same time in the second half of September, on the 22nd of September, we have a potential event that might actually give us a cycle low in the US dollar, which is the FOMC meeting. Clearly, nobody expects any changes with the rates, at least until perhaps 2023, as the Fed indicated quite a while ago. But perhaps if there is a mentioning of tapering at this upcoming FOMC meeting, that might be enough to strengthen the US dollar. Next, let's have a quick look at the general stock market. The intermediate cycle in the S&P 500 is already 188 days old. Usually these cycles last for around half a year. And of course, sometimes they can be quite a bit longer than half a year. So I'm afraid perhaps over the next several weeks, we might see a sizable correction in the general stock markets. If that happens, that might be beneficial for the precious metals. Zooming into the short-term daily cycle on the S&P 500, these usually last for around a couple of months. For example, in the ongoing intermediate cycle, we've seen a short-term daily cycle lasting for over 2.5 months, second one lasting for about a couple of months, and the current short-term daily cycle on S&P 500 is 51 days old. So there is quite a bit of a chance that the correction in the S&P 500 that we've been observing over the last couple of days might actually translate into at least a short-term daily cycle low, where the S&P 500 perhaps comes to retest this 50-day moving average over the next few days. Or there is also a chance that this correction translates into an intermediate cycle low as well. So perhaps a short-term correction before the intermediate cycle continues, or a bit of a stronger correction to end this ongoing intermediate cycle. Both of these are quite likely, at least based on the cycle durations. Additionally, what you could see on S&P 500 is negative divergences on RSI keep popping up all the way since July this year. And well, usually negative divergence precedes some sort of a correction. So that's just one more technical factor that's also indicating that a bit of a caution is advised over here. But of course, nobody actually knows the future. And we're simply trying to discuss possible scenarios based on historical cycles and some of the historical technical indicators. Now finally, let's move to gold. And gold has been in this ongoing short-term daily cycle for 31 days already. Usually these cycles on gold also last for anywhere around 1.5 to 2 months, but of course sometimes these cycles can stretch as well. And well, it looks like the ongoing short-term daily cycle in gold has already topped over here in early September. But as DXY perhaps will continue down for at least a while over here, perhaps gold has another attempt at regaining this 50-day moving average before coming down into the short-term daily cycle low, perhaps in another 2 to 3 to 4 weeks. So unfortunately, perhaps a bit more pain is likely in precious metals, but in the intermediate term, as we are in a new intermediate cycle since early August over here, in the intermediate term, as gold enters into the second short-term daily cycle, I do expect a relatively higher gold price, perhaps over the next couple of months. And for a potential top in the ongoing intermediate cycle in gold, I think the round number of 1900, which was pretty close to the previous all-time high in gold from 2011, and the resistance from one of the recent highs somewhere around 1920, which is even closer to that previous all-time high, is going to be crucial for a potential cycle top, as I said, maybe in the next couple of months. Next, looking at the Optimism Index in gold. With these circles, I'm trying to mark these intermediate cycle lows and how do they correspond with low levels of sentiment on the market. That's when pessimism is more prevalent on the markets. And as you see, usually pessimism does align pretty well with these intermediate cycle lows, although sometimes this Optimism Index is at its lows relatively close to the actual price low, but not really aligned exactly, as it happened in mid-2019 and as it happened recently in the summer of this year. The intermediate cycle in gold actually finished in the first half of August, while the Optimism Index has bottomed before that and gave us a positive divergence, which I've mentioned in one of my previous videos. And since this intermediate cycle low, the Optimism Index on gold hasn't really come anywhere close to this red line. That's when everybody is too optimistic, and that's probably when you want to start taking some of your profits off the table. So that tells me that, again, there is some momentum left within this ongoing intermediate cycle, and I think the chances are pretty good that in the intermediate term, gold price will reach that round number of close to 1900, although in the shorter term, gold is perhaps likely to give us one more dip into that short-term daily cycle low before the next daily cycle commences. Next, let's talk about the miners. Unfortunately, gold miners have been lagging gold all during the ongoing intermediate and the first short-term daily cycle. So let's have a look at the Optimism Index on GDX. And what we're going to look at is this green solid line over here, which is the 10-day moving average of this Optimism Index. And as you see, for all of these intermediate cycle tops, this green line, the 10-day moving average of the Optimism Index, came at least as high as perhaps 62 over here. That's during 2020 and this year so far. And if you go a little bit further back into history during 2018 and 2019, again, this 10-day moving average of the Optimism Index on GDX, on the miners, rather than gold itself. At the tops of these intermediate cycles in gold and in GDX, this 10-day moving average again topped at least at 62 or considerably higher. So looking at the ongoing intermediate cycle in gold and miners as well, so far this 10-day moving average hasn't even reached the level of 60 yet. So while it's unfortunate that the miners are lagging gold a little bit, again, as I've already mentioned, there is a potential to see somewhat higher prices in the metals and in the miners over the next couple of months, although over the next perhaps 3 weeks or so, we might see one more correction. So there's a brief update on precious metals for you. I hope you liked the video. If you do, remember to hit that like button and share this video with your friends. Have a nice day and good luck in your trades.